All right, welcome everyone. Welcome to the Hurley Investment Trade Findings and Adjustments for Thursday, May 6th. All right, couple things we're going to go over today that are a little in the middle. And the first thing I want to go over was the question, Kevin, I'm not sure what you mean by due diligence. In due diligence, can't type. Due diligence is the market basics that need to be done daily. Almost, right? I'm going to make the exception. Number one, fundamental analysis. Looking at the numbers of a company, and this, I do this over Christmas break and only once a year as needed. When we were going through 2008, I was doing it all the time. I was doing it monthly. Kevin, what do you mean? What do you do? Well, I've got a form called Fundamental Analysis, but in all reality, I am going through and checking FinViz, and I'm copying down numbers. So if I was going to do, I'm going to do Baidu actually, because I'm working on Baidu today. If I'm going to Baidu, I'm checking their debt to equity ratios. Is it under 1? Long-term debt to equity, is it under 1? If their PEG ratio, forward PE, current PE are in line with the industry, I'm looking at return on assets, return on equity, return on investment. I do and work through these numbers, making sure its average volume is over 1 million. I check the short float, huge short float, big short float rally could happen at earnings. I do my research to make sure the company's fundamentally sound. I make sure that they're not going to go out of business. This is a phenomenal company, and it has a ton of potential. Now, I work those numbers off of Yahoo Finance because Yahoo Finance gives me a little bit more. Yahoo Finance allows me to pick a company like Baidu, get their numbers, and their numbers could be in the statistics, it's in the financials. I get to check their valuation measures, their highlights. Here's all the stuff you just saw in FinViz. I see if it's close to FinViz. I make sure that we're looking at the same stuff. If there's a number that's out of whack, I pay attention to it. Look at the financials. Make sure I like what I see. But there's also an analysis or a running against other companies, and I make sure for the sector that it's about the same. I also really like a little sustainability that they have here. But I do my research. I do, and I make sure that it's what I'm looking for. I'm making sure that it's close to what the other companies like in Brazil are in China, what they're doing. I make sure I see what I'm looking for to justify what I get from FinViz. It's important to me to match them against other companies that are in that group, to make sure I'm not just looking at what I want to see, but I'm making sure I'm seeing everything in the whole picture. And then I also go to finance.google. And all this research is for free. and I do the same thing on this one-page form that literally is nothing more than making sure that what I see is what I need to see to justify why I'm in these and what I'm doing. Another couple things that you can compare them to are right here, and it's really fun to make your comparisons to see how much better Baidu is by just doing the comparisons to Tencent, to Tesla, to Apple. It really helps me justify that I'm looking at a fundamentally sound company that's doing what it's supposed to do. So right there, you have your basic fundamental analysis. We usually go to technical. And technical analysis, I do all the time. It is charts. And I brought up a chart. Let's do a little basic research on charts. When I'm looking at charts, I always start off at stock charts. And this is an important one. On stock charts, if I'm going to set up my chart, I typically have my chart set up like this. We have the RSI, the 14-day RSI chart. And notice right now it's at 30.6, which means here's your overbought line, here's your oversold line, and your median line at 50 is your bullish and bearish. So if we're to take a quick look, the line goes up and all of a sudden it crosses up here. It crosses and we have all this green up here. What does all that green mean? Someone please tell me, if we have all that green, what does all that green mean? If that is your, oh, I just told you. Correct, it's overbought. This is your overbought line, which means it should relatively quickly head back down. For Baidu, it stayed overbought for over a month, and it continued. Now, our first technical indicator, we had a crossover right here. The signal line crossed below the median line, which means we're now heading bearish. And right now, we are 0.62 points from going into an oversold category, which means as soon as it goes oversold, expectation is it should go higher. I'm looking at big money. So my crossovers in here, I'm looking at the 50-day and the 200. But notice how we get the crossover here, and let's go down to our MACD. We get a second crossover right here. This is the moving average convergence divergence. It's just taking the average of the 12 and the 26-day against the 9-day. If the stock price is lower, it heads below the orange line, and it means the stock is bearish. Now, if you're placing option trades and looking for technicals, you're going to have this chart, which has the 5 and the 20-day exponential moving numbers. You reset those down here. 5 and the 20-day exponential moving numbers. Now, the reason why we do that is because we're trying to catch a trade within 30 days. It also gives a pretty good lineup for technical crossover bearish, technical crossover bearish where the 5-day average goes below the 20, technical crossover for a bearish. We have these mostly lined up where we've got our 3 technical confirms and the stock starts to trade down. That is a very easy understanding of where to go. When we saw this, we actually had a 315 long put in place that we got to take off all the way down here. We were taking it off. In fact, when it expired, we were taking off those long puts right in here at the 185, 186, 187, 188 range. Great timing. Excellent timing. We did very well on that. So technical analysis, you do almost daily. We do economic analysis. This is daily. And we do this information from, primarily, I use briefings. We check to make sure. Let's see here. We had a couple this week. In fact, we had AMC. So let's go to AMC today. Thursday came after the market closed. I pay attention to all these. Where's AMC? There it is. It's at the very bottom. AMC. They came in. They missed by a dime. I knew that. I didn't know it was $1.42. But I pay attention and I write down in a planner, hey, they missed $1.42. The expectation is that they were supposed to miss and have a negative $1.32. Was the consensus what the numbers are going to be? They missed by a dime. They were down $1.42. Hey, AMC is not doing all that well. Revenue, they're supposed to come in at 161 million. Came in at 148 million. They missed top line. They missed bottom line. AMC had a bad earnings event. So my expectation would be AMC is down after hours, unless they decided to say, hey, we're going to knock it out of the park. We're going to do so good. We're going to really grow this next quarter. I doubt it. Yahoo Finance. Let's see what their after hours is. AMC. After hours, they're up 23 cents. That's shocking. If they miss the top and bottom line, their earnings per share, as well as their revenue, I would expect that they'd be down, but they probably put in here, hey, we're going to really come back good this next quarter as we're opening up movie theaters. The guidance is there. Pretty important to keep that in and understand that. More importantly, though, the economic is the calendars. I always write down what's happening, especially for today. Actually, I'm going to go this week because this week is more important. Daily, I'm writing down where we're at. Our manufacturing number came in less. It came in ridiculously less. Hence, we were down pretty good on Monday. Construction spending, supposed to be 1.6, came in at 1.2. By 7 a.m. in the morning, a half hour before the market was going to open, I knew we were probably not having a great up day on Monday. The future showed it. Trade balance, actual met the consensus. Pretty darn close. A little bit off, not too bad. Factory orders, pretty good. But factory orders is not a very important economic indicator. Tuesday was another down day overall, and the market is actually pretty flat. The birthday, I took it off. But I could see we're expecting 810,000. New jobs, only 742. Non-manufacturing services type of business, also not growing, not expected. Wednesday was going to be a down day again. Thursday, today, initial claims hit below 500,000. expected to be 530,000. Ridiculously good. Productivity, 5% came at 5.4. Ridiculously good. And here's one that's not good. They thought the cost of labor, the cost of paying people was going to be down 1.6%. It was only down 0.3. It's still expensive for people. It's still expensive to buy products. It's still expensive to, they don't have it in here. The key takeaway report is a pickup in productivity, and the corresponding effect is helping to hold down labor costs, which is something they'll continue to feed the Fed's patience for holding its easing policy despite clear signs of commodity cost inflation. Pretty interesting to understand what you're looking at. And then last but not least, Sentimental Analysis. Now this is daily, and it is a social science. Sentimental Analysis is the VIX, seeing where the fear indicator is. Not down at the lows of 15, probably going to go back up to 25. It is the CBOE put call ratio. If more people are buying puts than calls, and you can choose indexes, you can choose exchanges, volume and put call ratios. Oh, come on, guys. It's giving me all the data. It's not what I'm looking for. Anything above 1 means that people are buying twice as many puts as they are calls, which would be considered a bearish. Well, I'm not doing a good job of showing you how I do my research. I am going to apologize. But this is what you're doing. And this is the analysis that should be done daily. Otherwise, you're not giving yourself the ability to make the best educated decision in your trading. And all this is important because there's some days when your money manager is doing all kinds of weird stuff. And you're going like, what the heck is this guy doing? But here we go. Let me see if I can find what I'm really trying to get. Let's print this screen. We made a decision off of our analysis yesterday. And our decision was for everyone that owns stock ownership in Baidu, we were going to add a second set of puts on their positions. So you're going to notice we have our original puts on our stock. They're there. We've done a good job. We're like, you know what? We need to have puts that are covering our stock ownership. We want to make sure that we are more than covered. But then we also now have, 195 puts that are in place. So we added 70 195 puts that are in place. And we also have 195 puts for all the 250s. For every 2 or 3 leaps you had in there, we added put calls. We added a put ratio to your calls to start to protect Baidu even more. So because we did our analysis, we felt we had to add extra protection into these positions. So we did our analysis. Let's look at Baidu. Let's see if we can do this in a way that we can see what we have here. 600 shares. Well, we got 400 shares, so we have 2,000. We know we had these puts in place, and actually now I understand. 1,400. The other 600 shares, we had short calls on them, trying to protect them way out in time, like $50. We have our call spread, and in this particular account, we added 4 more 195 puts for a little extra protection to the downside. Just trying to make sure that we had extra protection in place. Let's take a quick look at his Baidu. All kinds of stuff in here, right? 600 shares, protection. We had our original 400 shares, some calls. We have an extra set of puts that we're trying to use for these ones right here. Or we can also do a bit of a split where we're just trying to add some more puts against these calls to make something up on the way down. We've got all kinds of little things that are mixed up here. Just trying to throw a little extra protection to make sure that we are protecting Baidu a little bit more because it's not showing what we would expect. I mean, let's face it, Baidu is doing nothing like what we were expecting it to do. So these 240s are already paid for, 250s are already paid for, and we have an extra set of puts here, just trying to give us a little extra protection to the downside. And all of that came from doing nothing more than looking at our daily analysis. So, just wanted to show you guys a little bit more of what we do and what we're spending our time doing, why we're doing it, why it's important, how often you have to do it to truly plan on being successful. Are there any questions you guys might have? Jim, how are you doing? Any questions on today? All right, if you guys are okay, perfect. All right, guys, hey, have a wonderful evening. Enjoy your weekend. I'll see you next Monday evening, bright and late at 6 p.m. Mountain Standard Time. Guys, take care. Appreciate your time tonight, and I will see you then. Bye-bye.